Good morning, everyone. Good morning.
Good morning, Mwalim.
You are well?
Yes, I'm well. What about you?
I'm doing good. Kwenyu kumenyesha?
Hapana.
Which side of this country do you come from? Those trains were all over.
Yes, it was Singishu County.
Oh, you are in Gishu County, but you people had had long rains recently, isn't it?
Yes. Even it is about to rain actually.
Okay.
Yes.
That's good. I'm fetching my notes so that we. How are the other members? Yeah, we can mute ourselves so that we start the class. Our lesson today is about royalties. And when we are talking of royalties, these are periodical payments now based on output or sales. When the owner of an asset has given another party, normally called a lessee, the rights to use or utilize the asset. So these are only rights or the privileges to use the property as per the agreement. So you have two people here. The owner of the asset is called the landlord, and the person who is consuming the asset is called the lessee. So you'll find some other versions calling the landlord the lessor. So you have the lessor, the owner of the asset, the consumer of the asset or the user is the lessee. And this basically happens in things like, or the most common royalties are things like, we talk of the copyrights, we have the patents, we have the mining royalties. So you can see the nature of the asset. So you are using the asset for a given period of time as per the contract or as per the lease. We call the contract the lease. So after the duration of the lease now expires, or the duration of the patent expires, you stop consuming or using that particular asset. So someone will come up with an innovation, go ahead and get a patent from our institutions, the institutions that do offer the patents, especially on the innovations or what we call the IPs, the intellectual properties. So you say, I have this innovation that I've come up with. A good example at our place, we have this guy called Anthony who innovated the smart cane. You must have heard of it, the white cane to be used by the blind. So it's a smart white cane that can detect. So the blind doesn't need to be led by any other person, by a helper. So if Mudungu goes now to the patenting authorities and get the patent of his white cane, he'll be given a duration. And these patents, now depending on what you will pay, they could be 5 years, 10 years, 20 years, forever. So if someone else needs to produce on behalf of Mudungu, he has now to give the person a lease. So you get, I'm the owner of the patent. but I lease you the patent, you produce the white cane for a duration of, let's say, 3 years as I get the capital. That's how it works. So we have two sets of books. So you'll have the tenant's book of the person who is now using the assets, and you'll have the landlord books. And these books majorly, we cover 3 of them. I have what you call the royalties account, we have the landlord's account, and the manufacturing or the trading account, depending on the nature of the lease. So we are here. And these are the accounting entries. So we are going to have 3 major occurrences. When the amount becomes payable to the landlord, or rather, when they enter into the contract or the agreement, they'll agree and say, you are going to consume my asset for a duration of, let's say, 5 years, and this is the amount payable. So at that point, we are going to debit the royalties account and credit the landlord's account. Then from there, we expect now the tenant to pay the landlord the amount owing, depending on the agreement. Could be yearly, could be paid after a period of time, will be guided. So when the amount is actually paid to the landlord, we are now going to debit the landlord account and close it with the cash book because the amount has been paid. So our cash is decreasing, we credit, we debit the landlord's account. Then as at the end of the financial year, we are closing our books. If it is manufacturing, we are going to debit the manufacturing account. If the asset is of profit nature, we are going now to trade to debit the trading profit and loss account and credit the royalties account to close it. You can have an illustration and see how. Now we have an illustration here. We've been told that Makaa Limited took from Misitu Limited a lease of coal field for a period of 10 years, commencing 1st April 1998, on a royalty of 2,500 per ton of coal extracted. The output in the first 3 years of the lease was year 1, 200 tons, year 2, 360 tons, year 3, we have 900 tons. And you are required to make the necessary entries in the books of Makaa Limited. So Makaa is a tenant, Misitu are the landlords. So there we are. So we are seeing the contract, or we are seeing the nature of the transaction. Makaa has been given a lease to extract coal. 10 years, but we are limited right now to 3 years. So that I've said, the first transaction is once the contract has been entered into, we are supposed to debit the royalties account, credit the landlord's account. Then we expect that when the payment will be made, now we close. We are going to debit the landlord's account, credit the cash book. And then as at the end of the period, we now debit the manufacturing and credit the royalties. I don't know how easier it will be for you to maneuver. I've tagged you these notes in your portal because from my end, I want to open a workbook. I want to stop sharing the illustration. Have you opened your illustrations? Kindly do so for those who haven't. Kindly open your illustrations. I'm giving you some time. You open the illustrations from your portal, from the portal, so that we go together. Very well. So I'll stop sharing. I'll try to. I'll share my workbook instead. So let me call this the royalties account. Then I'll have the landlord's account. Are we there? I need a confirmation from your end. Are we good?
Yes.
So you can go on. We've been
Yes.
told that Maka Limited took from Isitu a lease for a period of 10 years, and it is commencing on 1st April. Yeah? So we have our year one. So our year one will be spanning from 1st April to 1st April of 1998 to 31st March of 1999. So you can just put here 1998, 1999. We just illustrate it as such. And then our amount is in shillings. So you said our first entry will be debiting the royalties account and crediting the landlord's account. So this is our year one. So we expect as at the end of the year, which is 31st March. That's when we are closing the year, 2099. Not 2099, 1999. We are going to debit the royalties account. We have landlord. The tons that you are producing are 200 tons, and each ton is going for 2.5. What do you get? So is 31st March. Should be crediting the landlord's account. What are you getting? 200 multiplied by 2.5.
500,000.
31st March. So we are crediting the landlord's account. You said 500,000?
Yes.
500,000. So that is our first transaction. That is for year one. So you can make the subsequent years because there is no much ado in this particular transaction. We can have the transaction that we can have the year that followed, which is now the 99, 2000. Let me copy paste this. What's the amount? The subsequent year was 360 tons. Multiply by 2.5.
900,000.
900,000. So this will give us 900,000. Then in the subsequent year, year 3, this will be 2000, 2001. Again, so is the year 2000. 2001. So the royalties for this year was 900 tons, right?
Yes.
So 900 tons multiplied by 2,500, what do you get?
2,250,000.
2,250,000.
Yes.
2,250,000. Can split my figures for purposes of so there we are. That is our first transaction where we have the contract being undertaken now between the lessor and the lessee. You say the lessee is Maka, the lessor is Misitu Limited. So our next transaction will be when now the amount is actually paid to the landlord. This is when the amount became payable to the landlord. That is our first entry. So when the amount is actually now paid to the landlord, you said you are going to debit the landlord's account and you are going to credit the cash book, right? I don't even need to have the cash book account. So I'm debiting the landlords with the payment and I'm crediting the cash book because my cash is decreasing, right? So
Yes.
assuming that we paid everything, so I want to close this book. So on 31st March, I'll have the landlord account being debited and the cash book account will be credited with the same amount. Yeah, so the same will happen for the year 99, 2000. So expect again when the transaction has been completed, I'm going to pay for the 360 tons, which is 900. And then in the year 2001, are you experiencing echo on your end? I have an echo. I don't know who is using two gadgets. There's someone who is using two gadgets. Why don't you switch one gadget off? The reason why we are getting the echo is because you are using two gadgets. You can mute one gadget. Yeah, thank you. So that is our second transaction. Now we are assuming that the lessee, now Maka, has paid Misitu Limited the amount owing of the royalties. So we've debited the landlord's account and we have credited the cash book account. Then the last payment will be as at the end of the financial year when we are closing our books. So we'll be closing the royalties account with our manufacturing account. These are manufacturing industry. They are extracting coal. Are we there? So our last transaction will be as at the end of the financial period. So we'll be closing these books for the first year. So we are going to debit now the manufacturing account and credit the royalties account. So manufacturing. Oops. I ought to have done it in the subsequent cell. So there we are. I'm closing the books. I debit manufacturing. I credit my royalties account with 500,000. I again do so as at the end of the financial year ending on 31st March 2000. So this is 99, 2000. I'm closing it with the 360. And then the same it's refusing to copy. So I'll be closing again the books in the year ending 31st March 2001. So this is 2000, 2001. And there we are. So I'm closing these books. Need to get the so if you look at the order of my entries, I've entered or I've done the entries. The order in which the entries are made in the accounts was in accordance to the introductory journals. So I was doing them or I was posting them as they come. So you say the first transaction is the sooner you enter into the contract now with the lessor or the landlord, you are supposed to, you debit the royalties account, you credit the landlord's account. That was the first or the introductory entry. Then the subsequent or the one that follows is when now you actually pay. And when you are making the payment, you debit the landlords, you credit the cash book. And then the last transaction is when you are closing your books of account. So there we are. Of course, no examiner will ask you such a simple question, but we are doing that for purposes of understanding or appreciating that the contract has been entered into. Are we there? So allow me to stop sharing this and I go back to the notes. So I believe on your ends, we are in the notes. Are we? So that we
Yes, we are.
Now, it's very unlikely. Now, you know, we are entering into, for example, when you are doing the mining. When I enter into a contract with you, let's say is a quarry that I need to extract now the building stones. I'm not sure whether, even after signing the contract, it's not assured that I'm going to get the stones that I was paying for. So you'll find that the royalty agreements, they usually contain a clause where the landlord agrees to receive a minimum amount of money because we don't know what we are exploiting, whether it is there or not there. It's like we are entering into a forward contract without knowing what the future holds for us. So irrespective of whether we are going to extract anything from the mine or not, or if we are going to get any output, or the output is less or more, we are going to enter into a contract and make a minimum deposit. This is what we call the minimum rent, or the dead rent, or the fixed rent. What you will pay irrespective of whether you get the output or you don't get the output. Now, in a situation where the lessee or the tenant's output result in a royalty payable that is lower than the minimum rent, the deficit is known as shortcomings. So you have the deficit here that we are calling the shortcomings. So we've said, I want to highlight these terms for you. So initially we are having, because these are the entries that you'll be making in the respective books. We've said that whether there was output or there was no output, the landlord will be expecting you to do a commitment. This commitment is what we are calling the minimum rent. Shall it happen that whatever you paid is less than what you are going to exploit, the deficit is what we are calling now the shortcomings. If in a subsequent period or if in the subsequent years, the tenant's output increases and surpasses the minimum rent, our agreement, again, depending on what you had agreed initially, may contain a clause that allows the tenant to recover some of his shortcomings from the royalties payable in the subsequent years. Now, the right of getting back what was paid by the lessee in excess in previous year is called right of recoupment. So we have another term here, imagine. So this is the surplus. So our surplus is called right of recoupment of shortcomings. And it is categorized into two. So you may have the restricted recoupment or the floating recoupment. And when we are talking of the restricted, this means that upon commencement of the agreement, the right recoupment is only for a specified number of years. So should shortcomings ever arise in the years after this, they will never be recouped. That's why we are calling it restricted. There are situations where by and by, whatever you expected now is different. You may get more. And because you don't want you to have abnormal profits and take advantage of the landlord or the mines that you're exploiting, they normally restrict it in the lease agreement. Now, under the floating rights, or what we are calling the unrestricted, the recoupment clause will allow the tenant to recoup the shortcomings in a couple of years, after which the shortcomings will arise, irrespective of the year of the shortcoming. So in this case, it's not restricted. It's very unlikely that you are going to get that kind of a lease unless the landlord is not in any business. So in other words, what you are trying to say is short workings recoverable should be carried forward, because in future, shall we have an overrun on what you are calling now the surplus, we are going to recoup depending on the lease agreement. Now, a situation occurs when we are unable to recoup. Let's say we are under what we are calling the restricted recoupment. Let's say for the previous year, for the previous illustration that we had, let's say we were restricted to 2 years. So we have the year 1, we have the year 2. Year 1, we produced 200. Year 2, we produced 360. Year 3, we produced 900. So if there were any shortcomings in year 1, we were supposed to have recovered it in the subsequent year. If not in the subsequent year, it will end there. Remember, I've said our restriction is on 2 years. So year 2 can only go to the subsequent year 3. Are we there? So that's how the restriction or the restricted recoupment occurs. But when it is a floating recoupment, it means that you are not restricted. So you are going to recover your shortcomings until the end of the lease agreement. I want us to have an illustration and see how this pans out. And before the illustrations, this is how we are supposed to make the entries. So basically, we are modifying our initial, the three journal entries, introductory entries that we made. So we are saying when the royalties based on output fall below the minimum rent, we are going to debit the royalties account, of course, with the actual output, and then the deficit will be our shortcoming. So we are going again to debit the shortfall of the minimum rent, and we are going to credit the landlord account. So the landlord will be getting the minimum rent. Then from there, when we pay, so our transaction 1 is occurring when we enter into the contract with the landlord. So our transaction 2 is when we make now the payment. We are going to debit the landlord account, credit our cash book account, just as the introductory part. Then our transaction 3 will be occurring as at the end of the period when we are closing our books. So at this period, we are going now to debit the manufacturing account or the trading account if whatever we were getting is a service. And we are going now to credit the royalties account, but the deficit that will be prevailing, all our shortcomings will be now there carried forward. So we are going to carry the balance in the shortcomings account as an asset. It is an asset because it has not been written off. Once it's written off, you will see in the subsequent transactions, we are going to write it off. And once it is written off, it is like an expense. So we are going to have the debit on the P&L account. So that's our transaction 3. In future years, when the royalties based on the output exceed the minimum rent, so we have a case of surplus, we are going now to do the contra. You can see our transaction 1 when we had the shortcoming. So when we have now the surplus, we are going to debit our royalties with the amount based on the output and credit the landlord account. We'll be doing this to cure the shortcoming. Then when the amount due are paid to the landlord, now once we get the surplus and we pay, we are going to debit landlord's accounts. We are going to credit our shortcomings account with the amount saved to close it. And of course, you are going again to credit the cash book with the amounts that you are going to pay out. And then the last transaction will be as at the end of the trading period. We are going to debit our manufacturing account and close our royalties account. But look at the part B, 6B. When the shortcomings were never recovered, we are going to write them off because we are closing our books. When we are doing that, the shortcomings that were never recovered, they'll be an expense. So by an expense, it means that we are going now to close them with the P&L account. So an expense is debited, so you are going to debit P&L, and you are going to credit the shortcomings, the short workings account to close it. Any question? Any question? So on this particular entry, we've learned the minimum rent, and we say this is the amount that will be paid, the minimum that can be paid to the landlord. Then from there, if the output is lower than the minimum rent, we are calling it short workings. And you said how we treat it. It depends with the contract. If it is restricted, whenever we get the surplus in the restricted period, we are going to recoup it. If it is unrestricted, it will be remaining floating until the end of the lease agreement. So we are going to recoup until we fully cover our lease agreement. Some of these leases are long-term. They may go even to 50 years. When you enter into a contract, let's say for mining, let's say coal at the coast, they may enter into a lease agreement. The Constitution agrees that you can enter into a lease agreement to a maximum of 99 years. So we expect that these leases, they may span for a duration of up to 99 years. So you can see how lengthy they are. If you are to enter into a floating recoupment, you may end up losing. Someone may end up exploiting the entire coastal region in the name of floating recoupment. Are we there? But normally what happens, there is a clause of reviewing the lease agreement after a duration of time, let's say 10 years. So after every 10 years, the landlord will again, or the lessor will sit down with the lessee and see the dynamics of that lease contract. They may review. So let's have an illustration and appreciate these entries. So if you go into your notes, we have the illustration, and I have two illustrations, one depicting the fixed recoupment, and we have another one that depicts the floating recoupment, so that we see how the entries are done. So in our fixed recoupment, we have Fingers Limited, a coal mine from Hand Limited, a minimum rent of 150,000 per annum, on which royalty fees was payable at 10,000 per ton. There was a stipulation that short workings could only be recouped in the first 3 years. So you can see why it is restricted. It could only be recouped in the first 3 years. So these are the areas you check even when you are doing your. So you've been restricted to 3 years. So the output in the first 4 years of the lease were 8 tons, 13 tons, 21 tons, 18 tons, and 18 tons respectively. You are required to show the entries to be made in the books of Finger Limited in the first 4 years. Remember, we are doing the tenant's account first. We'll be coming to the landlord's account later on. So I'm assuming you have the question on your end. So I'll stop sharing and go to my workbook. And going to my workbook, I normally advise students that the easiest way of doing this is first to summarize the contract. So it is a good practice. You start with a table where you enter the amounts, so that when you come now to journalizing or making the journal entries, you won't again start doing the calculations. It's easier. So I have a table here. Oh, sheet 2. You can fill this table together. I'll say it's a good practice that you start from the. When you summarize in the tables, it becomes easier for you. So here we are. So we start with the period. Our period is in years. We have the 4 years. Then we have the output in tons. So we have our output. Then the next column will be the royalties. Of course, we'll be multiplying now the output with the, we've been told that the cost of 1 ton is 10,000. So that will be our royalties. Then we have the shortcomings, short workings. Then from the short workings, the other is the surplus or the deficit. So let's look at the surplus. Because it is the surplus that we are recouping. Yeah, so you can talk of the recouped, short workings, and from the recouped we have the, if we don't recoup, we write off. So we have the written off short workings. Then the next column we can have the carried forward. We are having the short workings that will not be cleared in a particular period and they'll be carried forward. So you can have the short workings carried forward. And then of course, we have what is paid to the landlord. So payable. Let me just call paid. Let me call it paid to landlord. So this will guide us in knowing whether we have an outstanding or we have a surplus or we have a short working. So we can go, we have the years, we have 97, 98, 99, and you have 2000. Those are our years. Give me the output. You've been given the output there. The output are 8, you have 13, you have 21 and 18. Those are the outputs in tons. I'm confirming. Right. You can give me now the royalties. 8 multiplied by 10,000 is 80,000. Yes. 130,000.
21,000.
Let me put the commas. And this one already was 1.3. Yeah, so you have 210. And then you have the 180,000. What is our agreement? What's our minimum rent? We need to know the figure for the minimum rent so that we know whether it's short working or is a surplus. So we have a minimum rent of 150,000.
150,000.
Yes.
Yeah, this
Yes,
is what is now
150,000.
payable to the landlord. In the first case, we can say paid to his landlord. So is it a shortcoming? Landlord. So 150,000. So in the first year, do you have a short workings? You are supposed to pay a minimum of 150. Whatever we have been able to get as output is
80,000.
exactly. So we've said that the short workings will be compared with the surplus that will be compared with the minimum rent. So this is 70,000. I can put this in and put all these cells in.
70,000.
Do we have a surplus? No. Do you have recouped short workings? These are explicit questions. You say no or yes. We don't have, isn't it?
Yes.
Are we writing off yet? We have a contract of 3 years, restricted, isn't it? So we are not writing off. So do you have any short workings that were carried forward? Guys, the short workings recouped is the lower of the minimum rent. So do you have a carry forward? You have a carry forward, isn't it?
70,000.
Yeah, our contract is saying, if you look at the illustration, we've been told there is stipulation that short working could only be recouped in the first 3 years. So the 3 years are not yet over, right? So you have a carried forward. Now we go to the year 1998. We got output worth 130,000. Our minimum rent is still 150. So do you have a short working?
Yes.
Yeah, we have a short working of 20,000.
20,000.
Surplus, no.
No. No.
Mm-hmm.
No.
No.
20,000.
20,000
20,000 the shortcoming of.
Carried off.
carried forward.
Forward.
Yeah.
It won't be 20.
90.
Should be 90. Remember, we carried
90.
forward
Yeah,
70,000 in 97, and we
Yes,
have not
90.
yet gotten any surplus to clear, isn't it? So this will be.
Yeah.
Yes. 90,000.
Yeah, we go to the year 1999. We have 210. What are we supposed to pay? Our minimum rate
150.
is still
150.
150.
150.
Yeah, do we have a shortcoming?
No.
No.
Do you have a surplus
Yes.
of how much?
Of 60,000.
60,000, isn't it?
Yeah.
So what will be the recouped short workings?
Very good.
They are recouping for 3 years. Are we still within the contract?
Yes.
Yeah.
So
Yes.
So how much are we going to recoup?
60.
We are recouping the whole amount because for our first year we had 70, isn't it?
Yeah.
Yes.
Covering the first year. So are we writing off yet?
No.
Not yet because you're still in the contract.
We are in the third year. The contract stipulates third year.
We are in the third year.
Yes? Are we writing off? Are we writing off?
Yes.
We are writing off the 30,000, isn't it? Now this
Yes.
is English, it's not even accounting. So our shortcomings that will be carried forward will be nil because we've written off what was remaining, isn't it? Then we are in our last year. Look at the last year. The last year we have 180,000. What are we going to pay to the landlord as the minimum rent?
Going to pay
150 though.
150. Our contract was for 3 years.
No, we won't pay any rent.
We would pay any rent. Our contract was for 3 years.
Yes. So the contract ends, the rent won't be paid.
Now, should I take you back to the question? We leased at a minimum of 150 per annum, on which
Per
royalty
annum.
fees was payable was. Are we together? There was a stipulation that short workings could only be recouped in the first 3.
for 3 years.
So it doesn't mean that the contract is ending.
Mm.
Are we there? So the contract is ongoing. That's why we are mining in the 4th year. So what amount are we going to pay to the landlord? We are going to pay the whole rent, isn't it? Because we are tied by the restricted recoupment of 3 years. Pamoja.
Yes.
So do we have short workings? No.
No.
We have surplus.
No.
No.
We don't have surplus. We are supposed to be paying 150.
That.
The surplus is going to be 30.
Yeah, our surplus is 30. Do you have recouped short workings? No. Whatever we had, the
No.
contract is over. All this is no. It's like everything is now summarized. We just need to generalize, isn't it? So what you are supposed to know is that the short workings and the surplus column, these 2 columns, the short workings and the surplus column, are completed by comparing the royalties with the minimum rent. So the amount paid to the landlord is decided by the royalties in column 3. That is what is decided. Yeah. So if royalties in column 3 is less than minimum rent, then the minimum rent will be paid. Are we there?
Yes.
And the deficit becomes our shortcomings. If the royalties in column 3 is more than the minimum rent, then the amount to be paid shall be short workings recouped. So it's good to notice that's the area that the examiner will be checking. So from there we can generalize. So we have the royalties account. Royalties account. We have the landlord's account. The other account that we need to have is the shortcomings, because you have the shortcomings. If I go to the shortcomings, just copy paste this. Paste special. So this is the shortcomings account. Shortcomings account. So you can start journalizing. So we have the table here that will guide us. Only that our shortcomings account is now pixelating. Let me try to delete these cells so that I can avail my short workings account. Even this one, just delete.
Yes. Good.
Very well. So we start. We are in our year 1997. The books here are closing us at the end of the period, and our amount is in shillings. Should make this cell a bit wider. And this one. We go on. Our first entry will be on 31st December. So we are supposed to debit the royalties account and credit the landlords. What amount are we doing? 150 or 80?
And
150. Why 150? You've entered into the contract, and the contract is giving us what we are calling the restricted recoupment. So we are not sure how the future will be.
in the royalty account, we are going to debit
We are going to debit
80.
80. Now, in the landlord's account, what are you going to debit? What are you going to debit? 80 or 150? There's someone's gadget that is really noisy. I don't know what is not happening. Let me make this a bit wider. So we are crediting the landlord's account in the year 1997. So it's a double entry. So we'll be doing 80,000. So that is our year 1997. Very well. Now we are going to the year 1998. What are we supposed to do? These are 1997. As at the end of the period, we are closing the books, isn't it? You're supposed to close the book for this particular year. So we expect once we mine and we get the 80,000, we are going to pay our minimum rent, right? So we are paying our minimum rent. And we said that we are going to debit the landlord's account and credit our cash account. So what are we cashing the account with? What are we paying the landlord? Minimum rent or the actual? We are paying the landlord this amount, isn't it? So as at the end of the year, on that 1st December, escape, we expect to have 31st December, we expect to clear the minimum rent for that particular year, which is 150,000. So that we close the books. And this is what now will be giving us the shortcomings, because the difference now of the debit side and the credit side will be our shortcomings for that particular year, isn't it? So for this particular year, we can close the royalties account will be closed with the landlord's account, isn't it? So that one is already closed. So you can close this one. We are closing it as at the end. Once we make now the entries, once we pay the amount or the output that we got, we are supposed now to close it with the manufacturing account. So on that 31st December, we expect manufacturing account will be debited. So we are going to credit manufacturing. Let me just use short term. Manufacturing account with the 80,000, so that I close that book for that particular year. I'm closing the royalties account. So I come to the landlord's account. I need to close it for this particular year. So the balance will be the shortcoming if you look at our entries. So these are our short workings. So the difference will be 70,000. So that we close the book at 150. So I'm closing the book with the shortcomings account by debiting the short working account and crediting my landlord's account. So I'll come to the short workings account and do the entry. So I'm debiting the short working account. So on that 1st December of 1997, should have put this down here. So it's the year 1997. So I'm having as at the end of the period, my shortcomings account, my shortcomings that we realized in the landlords was 70,000. So I debit the short workings account, landlord, is 70,000. Are we there?
Yes.
So this will be the carried forward in the subsequent years, in the subsequent year, 1998. So I'm closing my books. It's the end of the year. So as at the end of the year, I'll need to close again the short workings account, and whatever will go now to my trading profit and loss account will be my balance carried forward, right? Which is this 70,000. So that's my short working. You can see it in our table. So our balance carried forward is 70,000. And I close the books. I'll copy the formula in the subsequent. There we are. So that is for the year 1997. So we go to the year 1998. You again follow the same procedure. So our first entry will be in the year 1998. You are supposed to debit the landlord's account with how much? What's the figure?
With 130.
130.
130,000.
Yeah, go with me. You credit the landlord's account. Just copy paste. So this is the year 99. 130,000. Oh, it's 98.
Mwambie.
It's 98. Good. There is the year 98. So we are closing this account as at the end of the period.
Manufacturing.
So the year is 98. It's 130.
130.
My machine is pixelating. Yeah, very well. We've closed the royalties account for that particular year. I want us now to come to the landlord's account. Do you have shortcomings for the 1998?
Yes.
So what are we
Yes.
going to pay the landlord?
We are going to pay the landlord 150.
We are still
1,000.
paying the land. Yeah, in 1998, our contract is to pay this 97. Our lease agreement is on us paying every year minimum rent of 150. So did we experience a short working or we have a surplus?
We have a short working.
Again,
Short
we have
working.
we have a short working. So as at the end of the period, we have a short working of how much?
20,000.
20,000. So we again close the books. Allow me to, in the interest of time. So there we are, but not without debiting our short working account. So this is the year 98. So what amount are we putting here?
The year 98, the amount you're going to put there.
Sorry, we are supposed to bring forward first before we close the year. So this on, we have a balance brought forward on 1st January.
Of 70,000.
Yeah, exactly. So balance brought forward of 70,000. And we have the short workings for this particular year is 70.
20,000.
So that we can now close our books at
90.
90,000.
90.
so our 90 will be now our balance as at the end of the period 19 ending 31st December 1998. So a lot of entries. So this one will be our
90,000.
copy paste. So there we are. We've closed our 1998. I need to create the space that I deleted here again. Insert for the subsequent year, which is 99. So we go to the year 1999. And this is where now we are in the year 1999.
Yes.
As at the end of the year, we are supposed to debit the royalties account with the amount that we were able to get as output for that particular period, which is?
Which is to 10.
Yeah, it is
10.
10. With the table, it's easier. To 10. So you are supposed to credit the landlord's account. This is the year 99. I'm getting the royalties. To 10. Are we there?
Yeah.
They'll close the same with the manufacturing account, but let's now come to did we experience a surplus or a short working?
Surplus.
It's a surplus. So what do we do? We reverse the entries to close the short workings account, isn't it? So initially we were debiting the short workings and crediting the landlords, isn't it? So to recoup our short workings, we are supposed to debit the landlords and credit the short workings account. Is it? Is it? We're in the year 1999.
Yes.
We have to pay the rent.
Yes?
The rent of that year first.
We need to pay the rent first.
Yeah.
Yeah, it's okay. We can start with the rent or recouping the short carving. It's okay. Yeah, we paid the rent.
Now the surplus.
Now we deal with the surplus. Are we calling it surplus?
Short work.
It is short working,
Yes.
isn't it?
Yeah.
Yeah, it is short working because the account that will be affected, we are going to debit now the landlord's account and credit the short workings account.
$60,000.
60,000 it is. So we close this particular period. So we are closing it at 210.
Yeah.
Just paste. So we come to the short working account. It's on the year 1999. So we are going to have what are we going to indicate on the short workings account? We have the landlords. We debited the landlord's account. So we credit the short workings account with 60,000. Then we go back to the table. Did we have a written off? For that particular period, we have a written off, isn't it?
So that
How are we
was
going to treat it? How do you treat it? Because we are writing off is an expense. So you are going to debit the royalties account and credit the short workings account. Isn't it? Don't say We are closing that. We are closing that short workings written off. We are writing off. If you go in our entries, we appreciated that whenever or if at the end of the financial year, we are going to have any shortcomings that is to be written off, we are going to debit the manufacturing account and credit the royalties account. And then to recognize it as an expense, we are going to debit our P&L and credit the short workings account, isn't it? I'm waiting for you to sink in. I want to close that book in the year 1999. So I'm going to recognize this written off because in the period 2000, we are not going to have the short workings. So already have been written off. So it will be going in the P&L of this particular year as an expense. You are going to debit the P&L and you credit the short workings account. Yeah, to write it off. So I'll come here on that first. So this will be the royalties account. With the 30. I go now to the royalties account. My royalties account is indicating 210. And this is where I'm asking, am I going to close it at 210? Or I'm going to credit the 30? Let's think. This book is being affected by our manufacturing, isn't it? Do you have the notes? Have you opened the notes? There is a transaction you are calling 5A and 5B. What is guiding you in making these transactions? Seems like people don't have the notes. Let me show you. This is what is happening. I'll stop to share and share the notes. So you can see what is happening. You can see our transaction number 5. When the amount due I'll pay to the landlord, we are debiting the landlord and we are crediting the short workings account with the amount that we have saved. Are we there? Then our cash book will be reflecting that amount because we have paid anyway. But remember, it's an expense. So if you look at 6B, that's where we are closing our short workings written off. So you'll be debiting our P&L with the amount and we credit the short workings account. Is that okay? And then of course you are going to carry forward the balance in the short workings account for the. And this is over because our contract was restricted to recoupment of 3 years. Sasa tuko sawa sawa. Can we close the account with now the 6B? So I can go back. Can give me a minute, I pick a call here. So I go back, I want to close this account, the short workings account. So the balance as at 31st December, the year is 1999. This will be the balance to be carried down. It's 90. I'll close that book. So that's it. Yeah, I've closed the landlord's account. So you go to the year 2000. So in the year 2000, we did the manufacturing and you were able to mine royalties worth 180,000. Yeah, it was 180. So in the year 2000, I debit the royalties account with 180 and I credit the landlord's account. Have indicated. So there we are. The year is 2000. Do you have any other transaction that is affecting the lessee books? Because as far as my knowledge goes, our table was ending at this end. Do you have any other transaction that is pending? We don't have. So you close this with the cash book. So you are paying the landlord this amount, 180,000 for the year is 2,000. Of course, I'll now close my royalties account by debiting manufacturing with 180,000. Question? So these are our accounts. Can bring this closer. So these are the accounts for the lessee, and our lessee was in the name of, we had Fingers Limited. So what will happen when we'll be preparing now the lessor's account or the landlord's account, our short workings will be reflecting on the other side, on the opposite side, but we'll be coming to the landlord's accounts. These are accounts of the tenants. So this is a situation or a scenario where we have a fixed recoupment. I want us to look at a scenario where we have a floating recoupment, or where we've not been given the duration, so we can recoup until the end of the period. And in your notes, you'll see illustration 4. Let me stop sharing and get back to the notes. It's a lot of back and forth. So there we are. Jane is not, her network is misbehaving. You can pass our regards to Jane. Now, that was a case of fixed recoupment. We have a case here of floating recoupment, being told that an engineer who had patented a machine, Innovative Manufacturers Limited, the right to produce and sell the machine under license for 7 years. And the stipulated terms were a royalty of 400 shillings to be paid on each machine sold, a minimum rent of 200,000 per annum, and should short workings arise in any year, a right to recoup such short workings in the following 2 years. So you've been given that clause. Should short workings arise in any year, a right to recoup such short workings in the following 2 years. In other words, it is floating. So we've not been told it's restricted to 2 years. It is subsequent 2 years. And then we got 97,400, 98,450, 99,540, and 2,000. We have 650. Then we've been asked to prepare the books of innovative manufacturers. So innovative manufacturers are tenants. The engineer is the landlord or the lessor. I'm assuming you have this question opened on your end. So I'll stop sharing and go back to our dashboard, our working book. And to make this easier, let me delete the figures in our table. Can also clear this, so we can delete. Yeah, we still have the same years, 97, 98, 99, and 2000. So our output here was 400, 450, 540,
The screen is not visible.
650. Yes,
The screen is not visible on my side.
it's, how is it behaving?
No, it's just, no, there's no screen.
You don't have a screen.
They're not sharing.
We are not sharing.
Okay. Yeah, there I am.
Thank you.
So I've said our output has been given as 400, 450, 540, and 650. Our royalties will be 400 per unit, right? So the first one will give us 160. The second one,
The
450,
second one,
180. By 400, it's 180. $540 times 4, that should be 216.
that's it.
Then 650, 13, 260. Confirm. Is it?
Yeah.
So we go on. Our minimum rent is supposed to be
200,000.
200,000. So do we have short workings?
Yeah. 40,000. No.
No,
No.
no. Carried forward? Yes, the
40,000.
40,000. We go on. What are we paying? Our minimum rent is still 200,000. So we have a short working of 20,000. No, no, not yet. It's floating. So this one will give us 60. We go to the third year. Our minimum rent is still
200,000.
200. We go to 16. Do you have a short working?
No.
Do you have a surplus?
Oh,
No.
yes,
You have a surplus of
16,000.
So
Yes.
recouped short working will be the 16,000.
16,000.
Yeah, so we are fully absorbing it. So written off short workings,
No, we don't have.
read the question.
Written off short work. That is going to.
Part C is saying, should short workings arise in any year, a right to recoup such short workings in the following 2 years.
Yes.
So we had
44.
44.
Yes.
Why 44? It is only year,
Because we have.
it's only year 97 that has attained that condition. Year 98 is yet.
is yet. So that is going to be 24.
Yeah, it should be 24.
24.
So our carried forward will be
Yeah.
84.
24. We've
No.
written off 24. So our carried forward will be
Yes.
20, isn't it?
It will be
We've written 24 down.
Mwalimu,
isn't it?
pardon.
In the year
Yes.
1997, our short workings carried forward
Yeah.
was 40, isn't it?
Yeah.
Of these 40,
Yes.
we've been able to recoup 16. We've written off 24, isn't it?
Yes.
So
Yes.
the carried forward
Yes.
is 20, isn't it?
The 20. Yeah.
Yeah, because we've written off the 24.
24.
Pamoja kila mtu. So we go to the fourth year, which is year 2000. This year we've done 260. Our royalties is 260,000.
No
Do you have short workings? No. Surplus?
No.
No.
You don't have surplus?
We have surplus of
60.
we have
surplus
surplus
of 60. Are we recouping short workings?
Yeah.
Of? We have only short workings of 20,000, isn't it? So although we have a surplus of 60, our short workings is the only thing that we can recoup, which is 20, isn't it? So we are not writing off. So what are we going to pay to the landlord? You've recouped 20, we got 260. So what are you going to pay to the landlord?
40.
Isn't it? Now this table is the most important part that you are supposed to be able to analyze. Once you get there, the journalizing is so easy. Even when marking your exams, if you are able to get the table, I'll be knowing that this is the right student. Is everyone able to note that?
Yes.
So can we do now the entries? It's easier. I have the date. So this one will be, we debit the royalties, we credit the landlords, isn't it?
Yeah.
60. Should delete. Let me just clear off this trash. Yeah, we are clean. In the interest of time, I want us just to use the same. So this is 160. So we need to close that book. We are supposed to pay 200, isn't it?
100,000.
So our short workings is, no, we are paying a cash of, the minimum is 200,000. 200,000. So we are closing our books at 200,000. So our shortcomings here is 40,000.
40,000.
So we close it with the manufacturing account. So this will 160,000. That is year 97, right?
Yeah.
Yes.
So our short workings account, we are supposed to come here and
to 40.
debit the 40. So that's all. So this will be our balance to be carried forward in the year
Our balance for
1998.
1998.
1998. Very well. So we go to the year 1998. What are we
180.
getting? 180,000.
180,000.
We can just close it.
180,000.
So royalties,
180.
180.
And the cash
then
to
the
be paid was
cash.
200,000.
The cash to be paid is 200,000.
1,000.
And there's a shortcomings of 20,000.
Yeah, shortcoming. So you can see with the table, it's easier to close, isn't it?
Yes.
Yeah, that is the year 98. We go to the year, no, I'm supposed to reflect that in my,
Shortcomings.
so my carry forward here will be 40.
40,000.
Then I have for this particular year is
20.
20,000.
to close the book at
60.
60,000.
very well. We go now to the year 1999.
The balance brought carried
Maneno
forward
maneno of the
of
current.
shortcomings.
Yes?
I haven't placed the balance carried forward, which is
Okay.
60,000.
So, yeah, we are there. So we go to the year 99,
216.
216.
216.
Can as well close the book.
216,000.
So in the landlord's account,
Now the royalties are 216,000.
yeah, our royalties is 200 and in the year 99, isn't it?
Yes.
Yeah.
216 to 16,000.
The cash to be paid 200,000.
You're paying a cash of 200,000.
Then the shortcoming.
There's a
Then we have a surplus of 16.
Surplus of
16.
So to close our books at 216.
16. 16.
Suppose this. So I come to the shortcoming account. I'm supposed to credit the surplus, isn't
We are
it?
supposed to.
Of 16,000.
Yes. Surplus of 16,000.
Now we go to the year. So we are not closing the books yet, are we? Are we closing the books yet for the year 1999?
No.
But we are writing off. We written off 24,000.
Yes.
Our carry down is 60, isn't it?
Yes.
So it's very simple. Our carry down is
60.
60,000. But we are writing off
24.
We are writing off
24. So this is 60. So you are writing off 24,000. So what's the difference?
The difference is 20.
Exactly. So this is what will be going now to the landlord's account, isn't it?
Yes.
So this is wanted to illustrate this for our books to close at 60. Need to close that book. So I'm closing it. So which book have we not affected? Which books have we not closed?
The 2000. The books of the,
Or we haven't done the 2000?
yes.
Yes.
I'm looking at the landlord's account. So we can go to the last one. That one has been reflected. So in the year 2000, we are now closing the books. Here we have 260, right?
Yes.
So you can as well close it with the manufacturing. So you go to the landlord's account, closing it with the royalties, which is 260. In the year 2000, try to eliminate
Gosh.
this. We need to close this book. We are now finalizing. We need to close this book.
Okay.
Our cash is 200. We are closing it with the balance. So you can see it's so automatic. The shortcomings for our past, the carried forward, this is supposed to be on. Is it behaving like that? So you are supposed to debit the landlord's account with our short working
Workings, which is 20,000.
20,000. So we close the books at 260. Any question? So I'm closing that book. Are we well? So just to reflect on the entries that you made, here we are. These are the books of accounts for, what are we calling this guy? You are calling them, those are the books of Innovative Manufacturers Limited, right?
Yes.
So the only hurdle there was to just appreciate that we had the short workings, and these short workings was fully amortized in the third year. But we had to write off because of the condition of the subsequent 2 years. Any question? No question. I want us to go to the portal. If there is no any question, the notes are there and there is a question I've posted there. You can try to work out. Yes. Then in our subsequent class, we'll be looking at the landlord's account. You aware?
Yes.
So enjoy your day.
You too.
Same to you.
But not without checking who was not in the class. I can see I have only 21. Vivian, how are you? Vivian Atieno,
Yes.
you're well?
Yes, I'm good.
Fantastic. So are you able to see these notes on your end, Vivian? You're able to maneuver
Yeah.
from your end?
Yeah.
Oh,
Yes.
okay. So have a good day, guys.
You too, Mwalimu.
Vivian is the odd one out because she's in the FR class. That's why I'm confirming whether she's able to get the notes. So I'll be ending the class in a few.